Good evening, traders. Today is Tuesday, January 17th. Markets are closed. We had kind of an interesting mixed day, didn't we? Dow Jones down 391 points, but yet NASDAQ eked one out in the green. S&P 500 slightly down. Must have been some news on the Goldman Sachs earnings. But let's get into the resistance that the S&P or SPY hit today. I'll show that to you on the next slide, but I wanted to show you this slide first. Okay, so we are here today, as you know, right here. This is the matrix, of course, for you newer viewers. The matrix is the lines that I believe the market makers are actually following. Because when you look at this blue line, this is the 1/8 line. Last week, we kissed it perfectly, right? And today, in the next slide, I'm going to show you some more information on that, on what on this blue line. But we came up and kissed today the weekly EMA 50 perfectly, and then got soundly rejected going down. Now, I expect, actually, oddly as it seems, the next move to be up and not down. And why do I say that? Let's go back to April of 2022. Not this year. This is January, as you see here. This is April. You notice how we overshoot it, but then we lose the back test. Let's go to August. Overshoot it, lose the back test. November. Overshoot it, lose the back test. December, overshoot it, and we lost that back test. It wouldn't be normal for it to come right up to it and then fail. Does that make sense? It's usually not how that works. Usually, you're going to stick your head above it, peek above, peekaboo, peek above, whack-a-mole, and then come down. Okay? Not just come up to it, kiss it, and then go down. That's why I expect the next move really actually to be up. Having said that, you guys know PPI tomorrow, right? PPI is coming out. Last month it came in hotter than expected, but we'll see about tomorrow. I mean, I can eat the pie in the face tomorrow, thinking, I think the next move is actually going to be up, and then PPI comes in hot, and then we just go flushing down. Okay? That's always a possibility. Okay, so that's why I wanted to show you this. So this is the matrix, guys. Okay, next slide. Next slide. This is the 65-minute chart. By the way, you might want to take notice of these numbers. Weekly expected move, upper end 405, lower end 395. Okay, now that blue line that you just saw in the previous slide, that is this right here. That is the 1/8 line. See that? We came right up to it, and we kissed it, and then it got soundly rejected. Okay. Now, actually, we more than kissed it. We wicked up, but ultimately, see that? Look at the tops of these candles. So now, 447 is the weekly EMA 50. And that's basically all I wanted to show you about that. So, as you see here, it's finding support right now at this secondary channel line. Here's the channel top. It's finding support on the secondary channel in extended hours. Okay? And then here's the tertiary, right? And then here's the middle of the channel. Okay? So that's what I wanted to show you about that. Now, this slide, here's the 5-minute slide. I want to point out a couple things. So here's the 1/8 matrix, right? Right there. Good to go. I didn't draw this line until towards market close. This line, 398.65, by the way, you might want to throw that in there in your charts tomorrow. That is SPY Futures 1 week EMA 50. And notice how it kissed it perfectly. Came up to it, got rejected. Came up to it, got rejected. Okay? And here's the 5-minute EMA right here. So that's what was stopping it from going higher. Now, I just want to call your attention to something. The reason why, so you guys know the markets have been up, what, last 2, 3 trading days, I think? Let me see. It's the, 1, 2, 3, yeah, roughly 3 trading days. And yet, on a day where you would think it's supposed to go down during the trading hours, we were just making, double. Here's a bottom, here's another bottom, higher lows. And we were still trying to take back the EMA 50. We weren't just like going down and then don't even attempt to take the SMA 20. Remember how that discussion I've had with you guys? Like, if you guys don't even try to take the SMA 20 back, oh, you're going lower, right? I've said that in previous videos. You're going lower. But in this instance, you tried to take back the EMA 50 1, 2, 3 times. Okay? And you're making higher lows during trading hours. Now, here's the channel top. This gray dash line is the former channel bottom for November and December. Okay? And then right there is obviously the 1/8 matrix line. See how that candle right there kissed it, perfectly on the 5-minute chart. So it respected it, right? See, so that candle closed at it, and this one opened at it, right at the line. Okay, so it's respecting the 1/8 matrix line. And obviously it's respecting these channel lines as well. Right. Now, look at the MACD down here. I was looking at it all day long. There was no bearish divergence in the MACD. When there's bearish divergence in the MACD, that does mean you're going lower, right? That explains why during the trading day, up, down, up, down, up, down, up, down, but not lower, not making new lows. That's what I'm trying to say, okay? Corroborated by the RSI not going below the red line here, okay? Here and here. In fact, that's a higher low than that. So that's why I'm like, if the markets makers intend for us to go lower, they're going to do it. After 3 trading days of being up, we still don't go down. Something's going on. Okay? Something's going on here. I don't know exactly what that is yet, but as I said in the intro to this episode, I expect you to overshoot the EMA, not come right up to it, kiss it, and then get rejected. Okay? So, something's going on there. Okay? Last slide. Here's the 1-hour chart that I took relatively recently. This is SPY futures as of, a few moments ago. And I just want to call your attention to this. This is the 1 hour, guys. 1 hour MACD. So the 1 hour MACD is pretty much still mid-range. See, here's the bottom. Here's the red line. This is RSI. Bottom, green line. Mid-range. Lower mid-range. It's not falling. And I want you to look at this. That's the MACD close to the 0 line right now, as of several moments ago when I took the screenshot. That's why I can't call it bearish. That's why I can't call the fall. Say, oh, you're falling. See what I mean? That's like, you're at the 0 line right now. That's not bearish, right? As I've generally been saying. So, and I want you to look at this. Higher lows, 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 and stops right there at the 0 line. If you're gonna fall, I expect you to start going down into the 0 line, and I expect the RSI to start sinking. But yet it's not. As of right now, I could be totally wrong when we wake up in the morning. See what I'm saying? That's why I'm like, I get that. Oh, look, that looks like a rising wedge. But how do you know that it's actually was going up and now it's trying to flatten out like this? Not necessarily keep going up. Okay, what's flattening out because it's by that channel resistance. Okay, so here's the 5-minute chart. Let's go to this. Zoom in. I drew this horizontal line right here. This is as of from overnight, because that was the low for overnight, and that is right now, as of a few moments ago, it kissed it, and this is the zoomed in version right here. You'll see it right here, right there. Kissed it, doop, and went up. So this could be a just double bottom scenario, because obviously it's respecting that. You see that wick right there, perfectly kissed it. That's the zoomed in version of this, with that, and the other points. So, and let's see where the 5-minute stops, because it could still be higher than this, a higher low. This is from the morning time, wee hours in the morning. This could stop at a higher low than that. So that's what I'm saying, guys. It's not like overtly bearish when it seems like, oh, that's a rising wedge and it should be falling. Yeah, but how do you fall when the 1 hour is still close to the zero line? Here's an example of how you fall. See that? Fall, fall, fall. Yeah, oh yeah, you see that? Yeah, but look at how far you are below the zero line. You're not there. You're right there. So how can you fall? Okay? So I could eat a pie in the face tomorrow morning when PPI comes out, right? But we'll see. I really think then the next expected move is up, and then we go down to backtest. It just seems abnormal for us to go up and kiss that weekly EMA perfectly and then get rejected and come down, and then we just go down. See what I mean? That doesn't seem right. It's not the normal sequence of how you normally do things. Just like in this example. Just pretend like this is a resistance line. You overshoot and then you come down, right? And you overshoot again, then you come down. You don't come up to it exactly and then go down, right? Just like you guys have seen time and time again, like earlier in the month when we were testing the hive, we went below that channel. We didn't just bounce off the channel. You see what I mean? We went below the channel, then came back up. You overshot below the channel and came back up. In this situation, I'm describing the scenario of what could be the opposite. You overshoot, then you come back down. Instead of at the channel bottom, you overshoot the bottom and then you come back up. See what I mean? It's very rare that you kissed it perfectly and then you bounce back down. So that's all I'm saying. We shall see. Let's watch futures tonight, and then we'll see what we wake up to tomorrow morning with PPI. Okay. I know futures are slightly down, but like I said, it found this and kissed it perfectly and it bounced off of it. All right. So, and feel free to please follow me on Twitter. Today I was giving some real-time updates as I was calling the market action. And of course, please listen to your favorite music while you're trading. Helps you get into the right mindset, ideally. Please give this video a like, share, subscribe, and click to be notified when I release something new. With that, I'm Agent 000, signing off.